Asia's relatively high savings rate and growing middle class have helped AIA, the region's third biggest insurer, weather the global economic downturn. I caught up with AIA's Group Chief Executive and President Mark Tucker in Hong Kong after the company reported a better than expected 28% rise in first half profit. I started by asking him how he's navigating the company through this uncertain global environment.
I think Asia clearly isn't immune to what is happening in the rest of the world. But in terms of AIA's business, we are 100% Asia focused. So we are 100% Asia focused. We are 100% retail focused. And the opportunities across the region in our business, in our sector at this time, remain very strong. I think the fundamentals for us, all about under-penetration of insurance, all about urbanization, all about lower saving or higher savings rates, all of these and rates of family formation, all of these are very important, and they remain structurally in place. So I think we believe very strongly in China's continued growth, and I think that will inform much of what is happening into the rest of East Asia.
So what are you seeing? Do you think the second quarter is the low point for Asian economies?
I think we think certainly in the second quarter with the Chinese economy is bottoming. So whether it's second or third, I think, but it's certainly bottoming, and we remain. Our view remains at 7.5–8% growth for this year and next is achievable.
What are the signals you're seeing that it's bottoming? And as far as China's concerned?
Well, I think a number of factors in terms of some of the consumer indexes. Inflation is clearly coming down under 4%. The economy and the policy weapons that effectively the Chinese government, the Chinese administration can use are immense. We think there is much that can be done with the economy.
What about your margins? How are they going to look in the coming quarters? Do you think they're going to widen some more as it did in this earnings season? The VONB in particular.
Yeah.
Value of the future business.
Sure. I think we look at both the margins and the VONB, the absolute amount of new business profitability. If you look at that, the margins grew 6.6% in the first half, and we've had a story of growth over the last 2 years. We think that growth will continue. In terms of absolute level of VONB, that is our real focus. Margins are part of that, but our real focus is on growing the absolute dollar amount of VONB. We saw 28% growth over the first half. Our objective is to continue growing that business, and we remain, excited about the possibilities.
What is your investment allocation as we're seeing a low interest rate environment and low investment returns?
Yeah, we have a negligible amount of US Treasuries, a tiny amount of US Treasuries. I think if you look at our total portfolio, we have 86% of our portfolio will be in bonds. And these are government bonds, these are corporate bonds, mainly Asian-based. So even if they're dollar-denominated, they're usually Asian issuers of these bonds. And what we're finding, and what we found over the last 18 months, 2 years, is some of the issuers themselves, some of the companies themselves, have come directly to us. They haven't gone to investment banks or banks in general, because they know we have the cash, we know that we have the capability to do this, and we've got very attractive rates. Governments, again, are giving us longer term. The duration goes out longer, and we are able to take a lot of the issuers of the Asian governments. So the quality of the portfolio has remained very strong, but the environment to date has not affected us significantly. The yield is the same this year as it was last.
Let's talk about China, since you're very positive about that
Sure.
market. The regulators there in the process of changing the investment rules for Chinese insurers. They're looking to broaden the spectrum for the scope for investment. How is it going to affect AIA?
Not significantly. I think the regulators, CIRC there, have been very thoughtful. They want to ensure that they're orderly markets going forward, and I think it's a good thing to be able to open up some of the investment spectrum. This is what's happened in a lot of the rest of the world. So I think it is moving in a positive direction.
Your portfolio conservative and prudent, and it is just in Asia and away from the troubled economies in Europe and the US. So how seriously are you considering to bid for the Asian assets of ING?
In terms of sort of press speculation and rumours about M&A And we have no comment on that. I think it's what you can see from today's announcement and the results is the focus on another record set of results produced organically. Record set of results organically. We have the right platform in place. We have the right people. We have the right priorities, and we remain confident about the future.